The original concept of critical illness was fairly basic. It was there will be an event that could impact your life in some way, and there's a financial loss, therefore the plan will provide it. Things have moved on since then, and something that was particularly serious and life-threatening many, many years ago is not necessarily the same today. However, the financial impact can be the same.
There's lots of costs associated with being ill, whether that be just travelling to and from appointments, to having to take short times off work in order to go and get medical treatment for a start. So even when being diagnosed with something that might not be particularly life-threatening or severe, there are financial implications of that.
When Vitality launched as Protect, it was with that often overused word, a unique system. And it was primarily a wake-up call to the market, which had pretty much been based around adding yet more conditions over many, many years. And it served to ignite the market into its current position, where more conditions are covered and wordings are superior to what they were, say, 10, 15 years ago.
From a longer term perspective, I certainly think it's a more sustainable approach to critical illness, particularly seeing as medical advancements in the future could mean that insurers are paying out vast sums of money for things that actually aren't really that serious. And indeed, that even happens today. It takes away that lottery element of critical illness for me, and means that a client's going to be paid out in line with how ill they are, and the potential impact that's going to have on their life.
Longevity of cover will be very important to many, many consumers, because having claimed on a critical illness plan, the risk of claiming a second time is increased. Those people who have had cancer are now more likely to get cancer than a typical person. And the same with a heart attack, the same with a stroke, it's more likely to recur. So if a consumer is looking to provide not only a wide range of cover, but at the same time ensure that it can continue, then the new Vitality plans, the 2 and the 3, will enable them to do that.
It's a welcome part because people don't just get ill and then get better and never get ill again. I think it's a simple answer. And particularly with a lot of the types of conditions that are covered under critical illness and serious illness plans. Cancer, for example, it's quite common that someone might get a stage 1 cancer and then that might progress onto something more severe. So the ability to have something when paid out when it's maybe not as severe, and then as any condition progresses, be able to claim based on how severe that comes, is a positive for many clients.
So by surviving the critical illness, you could be in financial dire straits, which death would not have created. So the ability to claim a second, a third, or even a fourth time is of great importance if you're actually sitting and thinking about how will life carry on after one of these illnesses.
We all know we're living longer, and as we're living longer, we're actually living with illness in later life. And what the dementia and frail care cover does is enable extra payouts. It extends the life of the serious illness for things like dementia, Parkinson's, and conditions that may affect someone to the point where they're going to need care, whether that be at home or even in a care home. Those things are not cheap, and it's a big societal problem at the moment in terms of how do we fund later life care. Dementia and frail care cover is a prime example of how we might be able to do that. And to me, it is a bit of a no-brainer to add on to your serious illness cover for your clients.
The very fact that you've integrated the dementia and frail care option into all the plans, I think that is a little bit of foresight that is really needed. We all know that we're an ageing population, and we need to be thinking ahead for ourselves. And not everybody wants to think about that when they take out a plan when they're younger. But by gum, it's going to be valuable as the years go on, and potentially I think that's going to be a godsend to people.
Financial advisors have a number of roles to play when it comes to advising their clients. Looking at their current situation is the obvious one, but looking at their potential future situation is yet another. So merely saying you've got a £30,000 mortgage over 25 years isn't sufficient, because 10 years beyond that, there could be some a form of organic brain disease that causes them to need care or need to go into a home, or whatever the outcome.